Okay, hey everybody, it's Trisha with Easy E-mini Trade. So as promised, this is video part 2 of gaining a better feel of the market using support and resistance areas. So I'm going to pick up where I left off yesterday and we can look at how you can use support and resistance areas to your advantage in your trading. Okay, so this is the NQ. We'll stick with that. This can be applied to anything that you trade. So here's our current candle. It's obviously still forming because we still have a few hours left before the market closes. But you can see that the price has been pushed almost down to support of this 43.50 vicinity, not quite there yet. And then you can see that we do have a couple areas that we can mark in this general area where we've got some common areas, whether, like we talked about yesterday, whether you're using high, low, open, close, or just the bodies of the candles. You just want to pick out a common area. And like I said yesterday, it's not an exact science. So like here, I just put in 72.50 right around the open of this bar, close of this bar, low of this bar, open of this bar, high of this bar. So I'm not saying that you couldn't use a little bit lower or you couldn't use a little bit higher based on this bar here, or lower based on this bar or these bars. And when you look at a 15-minute chart, like we discussed yesterday, you can fine tune it a little bit and see where the highest concentration of volume is. So based on what we have here on the daily, we've got the 72.05, 71, 72.50, 43.50, and then I've got this 71.01 and a quarter area. We'll just stick with this general vicinity for now. We won't get down into this area yet. So that's what we have on the daily. So let's look at it on a 15-minute chart now. So here's the 15, and these were the lines that we had drawn yesterday of support and resistance. So if I scroll over to the left a little bit, I want pre-market on here, which is what all of this is here. This is last night and then this morning pre-market. So we want to pick out some areas that look like we can use them as support and resistance. So when we take entries off our smaller chart, we have a pretty good idea of where price is going to get stuck. So right off the bat, you can see we've got 40 here, and the area that we just looked at on the daily chart was 43.50. Remember what we said, we're just looking for the general area, and we can fine tune it when we drill down on a 15. So this would be fine tuning it a bit. You could see here, we got this big blob right here of volume, and so I'm just going to put a line right at the highest, at the biggest area that we've got sticking out here. Let me just move that so you can see right here. So I'm just going to put a line of support resistance there. So that's where the biggest area is. You could see that we've got a little bit of bulk above us and below us in that little volume node there, but this is where we had the highest volume area. Now looking over here, you can see that we've got a couple bars where we got a little bit of consolidation, again overnight, so volume very light. But I'm going to fine tune this just a hair. I'm going to move this actually up to this area of 31.75. And the reason I'm going to do that is generally when you look at areas of support and resistance, it's generally unusual for price on the NQ to move, more than 10 points without a stall or hesitation. So if I put this down in this area of 26 and a quarter, under these bars here we have this common area, you can see that would require us to go from 26 and a quarter to 40, or 40 to 26 and a quarter. Most of us day trading aren't trading off a 15-minute chart, so likely we'd want to use a smaller stop, which is why most of us trade off a smaller chart. So I'm going to, like I said, fine tune that a little bit higher into the area where we've got general area of the close, the open, the high, close of this bar, open of this bar, support on this bar, on the low, and that's at 31.75. So that basically is like 9 and change, or actually 8 and change up to the resistance area. So I'm good with that. Now I want to look to the next spot, which would be down here at 12. I'm going to scroll a little bit to the left and just see if I can get any information from yesterday or the day before that I might want to use as a support resistance area. So in looking here, obviously we've got a huge bar here from overnight, and a whole lot probably went on within that bar. But looking here from pre-market yesterday morning, I can see I have this area of support at around 1775. I can use that, or I can use under these lows over here. So I'm okay with that, even though there's not a whole lot of room from 31.75 to 23. It's still plenty of room to take a trade off a smaller chart. The whole point in this is that if you see that you don't have a lot of distance between your support and resistance lines that you're drawing, then you're likely going to be cautious taking a trade in that area, or at least be exiting at one of the support resistance areas, or tighten your stop once you trade through that spot. All we're trying to do here is to basically give us an idea of where price might have some issue, right? So now I'm going to scroll over here to today, so you can see where we've got this widest blob of volume, and that's at 950. You can see the start of it is up here at like 15. The low end of it is down here at 7.25. So any support resistance that you draw in that area will be fine. So in looking at this 950 spot, you can see that I've got the open and close on the first two 15-minute bars from this morning. You can see I have general area of resistance here on the close of this bar. Here would be the open of this bar, low of this bar, and this now at this stage of the afternoon, it's basically been going sideways. But this morning starting out, I would have used this area here at 10.25, or I would start out up here at like around the 15.50 where we have this blob up here. So either of them are fine. So as I'm going along here, I'm just going to mark some of these. Now generally when I have a round number area on the NQ, I mark, so here's 7,200. I mark an area of resistance just above and just below. And for myself, I tend to stay out of those areas unless I have a range where price is going sideways. And so this would be my no zone here from probably, I think today I was using 450 to 95.50. And you'll notice on a smaller chart that we did get stuck in those areas quite often. And I'm going to show you on a smaller chart here. So I'm just going to go ahead and finish this up here. So where would I like? So I'm going to mark this in this general area here where we have the low of this bar, we have the close of this bar, we have the open of this bar. So that's 88. And then you could see if we trade below 88, and this obviously a lot of this was filled in this morning once we opened this volume over here to our left, but I'm just going to pick a couple areas. So this 76.25 based on the low of this bar, the attempt to break through this bar and it failed. We have resistance on this bar, support on this bar. But remember what I said about that 10 points difference between the support and resistance. So realistically, you can see that we do have a lot of congestion in this spot. So I'm probably going to fine tune this again. And I'm going to just pick an area where we kept hitting and holding here pre-market. So I'm going to use 81.50. If I decide that I need a little more room between 76 and 81 and change, I could actually move this down a hair based on the volume over here to the left. So we got 74.25, and then over here you can see right around the 67.75 spot where we've got the attempt at the area here, and then here, and then it failed. Basically, it tried to get through and it failed. Could not close below that area, right? So I'm going to fine tune it. I'm going to use 67. So before these bars were complete here, I would have been using the area just above that I just had marked. But once price has been forming for a while, you can fine tune those areas of support and resistance. So now let's look at these areas that we've got marked on a 1 minute chart. I don't use a 1 minute chart, but I'm going to start out there and then I can show you what I like to do and then use it to your advantage or disadvantage. Some people might think disadvantage. But this is a 1 minute chart and I have the volume on this as well. So we can even fine tune it a little bit more. You can see this area right here holding, holding, holding. So let's go ahead and let's mark that general area. And so that is going to be that 1550 spot. So this morning, looking at this on the 1 minute chart, we have all of our areas of support and resistance marked. So we don't really know if they're going to hold, obviously, until they come to that area the first time around and test it and see if it can hold or not. So what I generally look for is I will look for let's just say, obviously we all have our setups that we like to trade. So if price isn't really going in a strong direction, then we're looking at reactions at support and resistance areas so we can take entries based on those areas holding as support and resistance. You'll see I have this yellow line here. And actually I need to change the chart setting time here. I use start time of 1800 because I want my settlement prices to match what CME has. So for me at Eastern time zone, start of 1800 and end of 1700. So this means that this opened at last night at 6 o'clock and it will close tonight at 5 o'clock. If you're using Ninja, you can use the extended hours, but I will tell you that I've had some issue getting the high, low, and close to match on Ninja, matching to CME. So I just would recommend using your own template for session template. So on this 1 minute chart, you can see I've got previous day's low, which is here. This is yesterday's low at 875. I have the close. Where is the close? Oops, wrong way. Here we go. Close from yesterday is up at 72, 73.50. Here's the open, and then we have the high up there, 89.25. So once we're trading, and whatever chart you're looking at, it doesn't matter, but you always want to look at a higher time frame just to get an idea of where the areas of support and resistance are holding. So generally, if I have an area of support and resistance that I drew and it's close to the previous day's high, low, or close, then I will get rid of my line. So like for example here, once we traded off the open, you can see here about up to 9:45, we had this area here that was kind of consolidating. So what I'll do is I will move the area or draw an additional line of support or resistance. So this is the general area here that was holding into 9:45, 10 o'clock. And then I would add one up in this area as well where we have this tail and it kind of got stuck up there. So that would be my new area of additional area of support and resistance. Like I said, I can go ahead and get rid of this 1050 line since it's so close to yesterday's low. So what I like to do is, if price is moving strongly in a direction and I don't happen to be in because I didn't have a setup, let's say, then I'll look for pullbacks to those areas of support and resistance. So right off the open, price takes off higher, and I don't do anything right out of the gate off the open. So what I do is I let the market figure out which direction it wants to go, and then I can look for an entry in. So all while price is moving higher off the open, and this is a 5-range chart on the NQ. You can use whatever you like. So all while price is moving higher at 9:30 off the open, I'm just scrolling back there so you can see it on this little range chart. I'm not really interested in doing anything because for me it's just a little bit too close to the open. So generally I usually use like 9:33 as my time that I'm willing to enter in a trade. So once price starts to move higher, then I would be looking for a pullback. So you can see it's into my no zone here. So I'm not going to do anything in this round number no zone here. But if I can get a pullback maybe to 88 area, I'd be looking for an entry somewhere around there. If you're somebody who uses moving averages and you have a pullback to a moving average, you certainly can use that as well. But I'm not willing to do anything up there. I'm just being patient until we know what the market wants to do here. Now, once in this no zone, if somebody were so inclined, they could definitely take an entry in there. Again, it's going to be up to you and your trading plan, what you're okay with and what you're not okay with. So again, this is still just a little bit too early for me, so I'm just at this stage watching the market and let it digest, and then basically looking to see that now that the market is open, which areas of support and resistance are going to hold that I can use to my advantage. So here, for example, we get a setup in the general area of the top end of the no zone for a trade setup that we like to take. But again, nothing I can do into that zone, or that I'm willing to do. Not anything that I can't do, but just nothing that I'm willing to do there. Now, it tries to pop here up to yesterday's low area. Now, if I was confident that this was going to hold and it tried to get through there and I had some divergence, I could short off there. So basically, we're just trying to pick areas where we could take pullbacks if it's a strong market or weak market, I should say in a strong trending market. Or if there's no real direction, then we're just looking at the areas that keep holding as support and resistance to take trades. So that's basically what we wound up with this morning. So you can see it pops through here. This is yesterday's low. So once it pops higher, I'm looking for the next area of resistance to be hit, or in this case here, I'm looking for resistance to hold and see if I have a reason to try to take a pullback, either as a buy, or if resistance is holding, I can have a pretty good idea of where it would likely trade to based on support being below me. So I'm getting some divergence here. You'll see I have higher highs here than here, and then this is just the same double stochastic we use for our Slinky filter chart. And then I have a lower high here than here. So if this were at a resistance area and I have divergence, then I could try to short that. Now, obviously, if it's a really strong market, you're not going to want to short it, but this would be a heads up for a pullback that maybe if it pulls back to support, then you can buy it and stick with the overall trend. So nothing that I can really still do here yet, because I'm not really tagging the area of resistance above me yet. Now, if you want to be aggressive, you still have divergence here, right? Higher highs, lower highs. So you could literally decide to go ahead and take that. You are definitely going to want to be very cautious in the areas that you're taking those. just because you see divergence doesn't mean, okay, take a short. You want to be at resistance or at support when you take divergence trades. And again, if you have a strong trend, best to stick with the overall trend. So here we go. Now this I like better. Why? Because now it's actually tagging that 1875 area, and I still do have divergence. And I'll just point it out here. So here, higher highs on price, lower highs on the stochastic. So I can go ahead and I can short this and expect support. That would be like, I don't want to say expect support, but that would be my target area. And then if it can get through there, then I'm looking for the 90 EMA as support. And then if it gets through there, then I'm looking down here as my target. And then if it gets through that, then I'm looking down here at 4 1/4. So you take the short, and generally you're not waiting for runners on those divergence type trades. You're paying very close attention to the target area of support. So if it can't get through here, then you're not going to let it bounce all the way back up to your entry. So you're going to generally use that as a target area. And if you're going to exit in stages, you take a portion off here, and then you can move your stop to a tick better than your entry. And then if it breaks this area of support, then you can move your stop just above that area of support. So you can see it bouncing, 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 and then it drops to the next area of support. Now, I'm not saying that you would have maintained staying in this trade when it broke down here. Not likely. I can say that I wouldn't have. After it keeps holding this area, I'd be pretty happy to get out here around the 13 and change area. But once it breaks down, if you don't happen to be in or don't have a reason that you're entering again, then you're looking down to the next area of support to see if you have a reason to try to buy it. And this support is the previous day's low. And we know that we have some reaction there, right? Over here. So we're looking to see if we get divergence off there and can we buy it. So it attempts, and there's our divergence. So here we go. Lower lows on price, higher lows on the stochastic. So we can go ahead and we can buy that here. Now you can wait for the bar to close. Generally what I do is I'll wait to make sure that this stochastic is rolling over. And looking for divergence is a conservative way of taking entries at support and resistance. If you're very aggressive, you can literally put a buy order sitting up here at 875 or 9, and once you see divergence, and just let it trigger. It's totally up to you how aggressive or conservative you want to be. So if you buy this area anticipating the bounce, we're looking at the 90 EMA as a possible hiccup area where we might get stuck, and then the next area would be back up here at the 1350. So you take the buy, you see it struggling here in the 90 EMA area. So you're on alert. Okay, should I take my target up there or wait and see if it can, get through? The thing is that you can take a few points off, and then if it retraces back down here again and you get divergence, you can try it again. So you don't want to let this turn into a losing trade. You're just expecting up to the next area of resistance. If you use a super trend stop, very often you'll notice that price will hold those areas as well. So here we are down in this vicinity again, right? So if you bought it here, maybe you got 2 or 3 points out of it, and then you can see we get another attempt at that area, right? And if you go from back here, or even over here to here, here to here, we have equal lows, while on our stochastic going from here to here, we have higher lows, and we're at support, so we could go ahead and buy that again. And I would not buy it under the low from yesterday. I would make sure I would be buying it above it. And so we're still looking at the same area. If it can't get through this area where we got the 90 EMA, then we just have to be willing to get out with a small profitable trade. But if it can, then we're looking at 1350, and then back up here to 1875. Now what I would do is if I was in this trade, like I said, I'd be watching this area, and if it does happen to pop and can get through these swing highs right here, then I would be looking obviously for the 1375, 1350 above me, but I would also be aware of these, the swing high here where price was struggling and holding, and that's around that 17 spot. So you get in long, and there you go. And there's the areas. And then again, you're looking back up here. If it gets up to 1875 and can't get through, or we have divergence, then we can look to see if we can get a short there. Now, I would not recommend doing this in a very whippy market, and I would not recommend doing this into news, definitely not into news, because obviously we don't know what will happen when the report comes out. So you definitely want to at least be taking these types of trades in a market where, you know, it's not trading very far through support or resistance. So like here, I generally like this when it tries to get through and it can't, and here tries to get through and it can't, because that's giving me confidence that, hey, it tried to move lower here and it couldn't, and then the same thing here. So that, you know, adds confidence to, you know, buying it off this area because it couldn't break down. So I think I'm going to end with it there for today, and then we'll do more tomorrow, and I'll show you how you can apply these same principles looking at charts with a couple more reference areas, such as the market profile using value area highs, lows, and the VWAP. Okay, so I hope that you find that helpful, and I'll give you part 3 tomorrow. Have a great day, you guys.